guess how much I make on this trade. Just guess, just a wide guess. You can see this 4.5. So guess how much I made on the trade. Okay, if you're wondering how much I made on this trade and how I got to this trade, now I'm going to show you there. Let's dive in. Hello, good morning. My name is Alentin and welcome to the chat. So today I'm going to break down the trade I took on Friday. So starting from it, I'm going to give you a daily key level. So from the daily time frame, this was why I was bullish on the day. You can see that. Sorry, I'm going to zoom that up. So you can see that on daily time frame, we took this low, right? Then taking this low, we closed above this FUG, right? So our target becomes this highs and possibly this highs. So that is the basic, or that's the daily bias for today. So any low below any price movement moving down now, we know we are bullish on the day. So 1 hour time frame. Now on 1 hour time frame. Now I'm going to say something first. Okay, you can see that this candle, this red candle you are seeing now, was when Trump made a speech yesterday or made a tweet. So it dropped and took liquidity from these lows. It was pretty big. Took liquidity from these lows now and closed within this candle, right? If you are famous with CRT, you should know this pattern already, and close below. So that is pointing to us that this candle is going to be bullish. But for us to be sure and for us to be quite sure, we need to let this candle close first. So at 10 a.m. this candle is going to close, and this is the high we're going to be targeting. So at 10 a.m. this candle close. So 11 a.m. opening, we want to be a buyer going to these highs. We are anticipating that the next 11 o'clock candle is going to at least take these highs. So that's the basics. So now on 1 minute time frame, this is 1 minute time frame. Okay, on 1 minute time frame, you can see that this is what we have. Markets took some lows from this low and also tapped into an FUG. Now after tapping into this FUG, you can see we had a rapid and aggressive selling from this point. So all this FUG were supposed to be engulfed. If you go on 5 minute time frame, you're going to see it. Now this is the FUG on the 5 minute time frame. So you can see, right, this is the 5 minute FUG, but I wasn't using this actually. So back on 1 minute time frame. So knowing this, I needed to see price 1 close above all these FUGs. Then 2, I needed to see price close above this OB, because this OB is an opposing order block. So I needed to see price to close above this FUGs 1 and to close above the order blocks. That is when I could know, okay, I'm positioning for buys. And this is already 10:58. That is 10:58. This is 10:59. Now the 10 a.m. candle has closed bullish, so I'm anticipating that the next 11 a.m. candle is going to take this high. This is 10 a.m. high. So this was 11 a.m. candle. This is 11 a.m. at the dots. So you can see 11 a.m. closed aggressively above this order block. So now having that in mind, now I know that, okay, since we've closed above there now, the price may have two things. One, this order block may hold price up to see this high, or price may dip lower into this low to see lower prices. My limit was here, but this was my 0.5%. I wanted to go full in here, but it's my 0.5%. But just in case market doesn't want to come below because of this order block, I had the second entry here just below my stop loss, just below this order block. So I'm going to delete this. So this was my second entry, and this was half position also. So at this now, I got in at this point. At this point, I was in the trade. Now, I expected market to move rapidly because the volume from this candle alone is quite huge. So I expected market to move violently from this low. But market started stalling, market started weakening, started testing over and over. So, but as soon as market closed above these highs, I knew okay, this was the last confirmation I needed, and this is an order block to get us to this high. So knowing that now, and since I was half on my position, and this is another block, so I had to go in on this for my second position. So my buy limit was here, stop loss was here, and take profit just a little above these highs. A little above these highs. I guess it was around this point. So this was my second entry. Okay, my second entry was I think it was actually below this low. Yes, I think it was actually below this low. So that was the second entry. So now I got this one out of the place. Now price played. I got in on the second entry here. And secondly, I want price to move violently. So price was struggling. So after noticing that price was struggling, and it was because of this order block by the left side, price couldn't break a body below it. So I announced, okay, since there is buyer here, there's sellers coming in from this point. Now for buyers to be able to get to this, to be able to go above this highs, there is an FUG below this low. If price could just tap into this point, then we are going to have a high to this point. So that was what I was hoping that price was going to do. So, but this candle took some lows. You can see this candle right here. It dipped down, but it wasn't the best. Actually, it wasn't the best. Dipped down, took some lows here, but that wasn't the best. Like I said, that wasn't the best. Took some low, I never mind. And this aggressive push out, this reaction from this place was good. So I now say, okay, it's fine. Maybe this is the last liquidity sweep price wanted, and I kept my stop loss just below this low, just to reduce the risks on the table. So this was where I kept my stop loss. I was supposed to have gone break even, but it was too early for a break even, so I had to just reduce the stop loss. And the next thing, this candle came and took me out. Yes, you can see on the chart it didn't take me out, but due to spread, it took me out. So I was out on this position for a $6 loss, and I was out on the first position for on break even. So after it took me out, and this was what happened immediately. So this was the move I intentionally wanted. This was the move I expected price to explode, but it is what it is. So I'm going to play the execution, so you see the executions. Okay, you can see this was supposed to be a banger winning for me. You can see, right? This was supposed to be a banger winning for me, but what happened? So let's go inside so I tell you what happened and why it wasn't a banger winning for me. So you can see, right, this was where I got in. This was the price market closed above, and this was where I got in on my first entry. Got in here on my first entry. Then this was the second entry I got in here. I was supposed to get in here on this second candle, but I was waiting for this FUG to be created on this candle. Then when I saw that, okay, market wasn't interested in coming to test this FUG, so I had to go in on half lot. I was thinking that, okay, once market comes to these lows to get in, then I'll get in on the second lot. So that was why I hesitated a bit. But markets get here and broke above these highs as an OB, then I got in on my second entry. Then when markets moved higher after this low, my stop was at this low to reduce the risks, and this took me out on my loss. That is what is it called? Spread. So that was the reason why this trade wasn't a banger trade, and I wasn't aiming for this high. This was the high I was aiming for. Actually, I was aiming for this high, just this blue line. Okay, this was the high I was aiming for. I wasn't going above the high. So that was it. Thank you for watching, and if you like this video, hit the subscribe button, and see you in the next video.